Hi guys, it's Wendy from Ask The Landlady. I'm here with all the tips and tricks to help you make a profit in real estate rentals. And today we are going to talk about build versus buy in 2026, right? Because that's the question. What actually pencils out at the end of the day? I've done this a few times in my career, like looked at a place, had some property and was like, should I tear that down and build something else? And done some feasibility studies, run the numbers, blah, blah, blah. In that case, for me, it was always buy existing stock that came out there. But today's landscape looks a little bit different. It looks different in every neighborhood. You have no idea where, I have no idea where you're at. You might be in a place where you need that new construction, and so building's going to be better potentially, but you might be in an area where there's a lot of stock that's already out there, and maybe you can go buy some existing property for your real estate portfolio. So let's just take a look at some of the numbers, because you know I'm a landlady. I always look at those numbers, and so that's what we're going to kind of do today, is to figure that out, because you may have two homes, right, that you're looking at. One's built in like 1987, and another is just a brand new build that's just breaking ground. And from the outside, they might be kind of the same style, same, you know, they're both single family, 3-bedroom homes, same neighborhood, all that type of thing. But here's what is different, right? Probably the purchase price on something older versus newer. The finance terms might be different. On a new build, you get maybe some new things out there that might help with the financing for a few years. Your monthly payment, the maintenance reality for the next 10 years, right? That 1987 house is probably going to have more issues than your new build. There might be an HOA situation in there. There might be something to do with location. And if you're doing this from a pure investment, the rental income potential and your cap rate, all these types of issues could come into play. So here we are. Let's get into it. Let's start with those numbers. Like I said, let's establish the baseline, because the starting point for this conversation has shifted significantly from where we were just a couple years ago, right? We're in 2026 right now, and the landscape's looking maybe, potentially, for sure, a little bit different. Okay, I've been struggling with this freaking light all day and all night. I don't know if it even freaking makes a difference, but here we are. Okay, as of January 2026, the national median price of an existing home was $396,000, give or take some change, right? Some people more recently has had it at 420. So anywhere, somewhere in that 400-ish range, right? The average sales price of a newly constructed home, including land, sits around $665,000. According to the National Association of Home Builders. That's a massive gap, right? New construction costs about 68% more than existing homes on average nationwide. But, and this is critical, the gap is narrowing, right? The price difference between new and existing homes has fallen over the most recent years, driven by a couple forces. Number one, new construction prices have softened as builders compete harder for buyers, while existing home prices have stayed stubbornly high, right? Because so few owners with those sub 4% mortgages are willing to sell, right? Those golden handcuffs I've talked about in videos before. If you have a 2.5% interest rate, you're not moving, right? You are not letting go of that house, because those numbers are fantastic compared to our right now 6.3%. So that's kind of a force that's kind of maybe keeping you from buying any existing stock out there. Whereas these builders who, since the construction prices have come down, they've started building again, and then they're like, well, dude, I got to get rid of these, but people are not wanting that, so they're offering some more incentives. So in certain markets and in certain price ranges, new construction can actually compete with the resale, okay, if you build in those incentives and such. So, and the regional picture tells an even more interesting story. Say, in the Midwest offers the most affordable new construction anywhere in the country. Your build costs are as low as $100 to $150 per square foot in some markets. And you may have your existing homes around $300,000 versus that $400,000 mark. So that's where you could possibly be competitive in that range. Now, in the Northeast, thinking you're up there in New England, your new construction averages $784,000, which compared to $482 for an existing home is a 62% premium. You don't want to do that. That's not going to work as an investor, right? So there's a number that I'm going to put in front of you that will reframe this whole conversation, right? The average cost to build a home, construction only, excluding your land, is around $323,000, according to current estimates. The average existing home, including land, is around that $400,000. So in pure construction cost terms only, before you add that land, building is actually cheaper. So if you have land, this may be a time to actually build. If you already have that land, those of you who are sitting out there in land, this might be your time. Okay, so that's something to think about, is if you already have the land, construction costs are cheaper than that home that's sitting there at $400,000. Okay, that construction cost anyway. So if you don't own the land, then you are adding more in there, and if you have to look at your area and your premium and maybe what more you think you can get in rent to tell the whole picture, right? And I do want to talk a little bit more about those builder incentives, because that's the deals that people aren't really talking about. Over 61% right now in 2026 of our builders are using incentives to move their inventory. So that's the majority of them. And that, that means they're not getting the traction they want. So potentially, if you did want to buy a new home or a brand new constructed home and have that in your portfolio, this might be the time to jump in and negotiate a great incentive to make it a good deal, right? So many of them are offering, I'm going to talk about the incentives first of all. Some of them are offering closing costs. They're offering up to $6,000 to $15,000 in closing cost assistance. That's real cash, right, that you can add to your final numbers there. They're offering discounts on spec homes by $20,000 to $50,000. So if there's a spec house that's just been sitting there and they're kind of wanting to unload that, it's already done already. That might be the time to run some numbers and see if you can make it work as a rental. So, and there's also some lending incentives that they're doing, where they are often offering you a lower interest rate in year 1 and year 2, and then it goes up. So if you're in an area where you see rents is going up, and you can still make it at that higher interest rate, but you can take advantage of that lower interest rate they're offering you right now, then by all means you want to jump in on that. Now, one thing to be cautious of there is that a lot of these builders are going to push you towards their preferred lenders. So you want to make sure all the other terms are there. Or is it as good a deal to get an adjustable rate mortgage maybe versus the fixed rate? If your bank's offering you something more solid, you may have to go back to them and say, we're going to negotiate in a different way, because I'm going to take this fixed rate, even if it's a little higher. And where else can you make this deal work for me? So here's what it kind of lays out on the land here is there is an opportunity to possibly look at building right now. I'm still going to say overall, and I could run the numbers and tell you all about it here, but I would say overall, you're still better off buying existing, because we just haven't narrowed the gap enough on our supply costs and our interest rates and all these other issues that have to do with new construction versus the stock that we already have. Now, that being said, if you're an investor sitting out there with cash, it's hard to find deals, right? It's hard to compete with those people. They're holding on to their existing stock because of that 2 and 3% interest rate loans. So if you're in that situation, definitely go out there, check out some of these builders, see what options they're offering you. Tell me about them. I'd love to hear what incentives. Have any of you bought any new construction? I'd love to hear what incentives you're getting with closing costs and with your interest rate, so that we can all learn from each other, right? Because it's not easy being a landlord or landlady, and we're all in this together, because at the end of the day, we all just want to make money in real estate. So check out my books on Amazon, hit up my website, askthelandlady.com, and as always, please hit like and subscribe. Thanks. Have a great day.